On Business Incorporated today, Africa set to get its first listing of a medical cannabis firm on the Johannesburg Stock Exchange. Uganda's public debt climbs by 22% to $20 billion. And Afreximbank begins construction of an $80 million trade center in Zimbabwe. Good afternoon. Welcome to Business Incorporated here on Channels Television. I'm Ini John Mekwa. Let's start off as usual with intraday numbers, starting with Africa at the major stock exchanges. We see all in green at intraday. The NGX is sustaining that positive sentiment that it recorded at yesterday's rebound. This afternoon, it's up 0.04%. Yesterday, it closed with 0.11%. I might still head there. And then for GSE Africa, which is getting that first cannabis firm we just talked about, it's up 2.52% at 68,953.6. It's lost at 69,000 points, but it's really close there. It might regain that very shortly. We'll see other parts on the continent. In Northern Africa, we have Egypt is also positive, but this was for yesterday. They don't trade today, 0.32%. Kenya also for Thursday, it closed in the negative 0.29%. We move from there to the Middle East and see that in the Middle East, it was a mixed performance as intraday, starting off with Abu Dhabi in the green, 0.23% at 9,807.96. Dubai also following that trend, 0.18%, 3,365.31. In other region around there, we see Qatar in the red, marginally, those 0.05% at 12,948.92. Saudi is also in the red, 0.25% at intraday, 11,834.26. Let's go to Europe now, where the European Central Bank has announced the largest rate hike in its history and said that there was more to come. It's an attempt to bring down record high inflation, which is currently at 9.1% in the Eurozone. Our policymakers lifted the ECB's key rate by 75%. And we have joining us to tell us how this is affecting them. And of course, what else is happening is Christy Platson joining us. Hey, Christy, good afternoon. Well, what made this ECB go this much? I mean, last time it was 0.5. Now 0.75%.
Indeed, this historical leap in interest rates is matched only by a technical move the bank made in 1999, which was shortly after its founding. To give you some context there, I mean, as you said, Eurozone inflation hit a record 9.1% in August. Steep increases in the price of energy, I should say, which have followed since Russia's invasion of Ukraine, are really hitting households, hitting businesses. Basically, the cost of energy is pushing up the cost of consumer prices, and this is because it makes production more expensive, and companies either have to eat that cost or pass it on to the consumers. So as for the historic nature of this hike, it seems there is still more to come. ECB President Christine Lagarde said it was the bank was on a quote-unquote journey to raise interest rates and tame inflation. And the ECB already exceeded expectations at its July meeting with a 50 basis point increase in interest rates, and that was its first hike in more than a decade. So we're certainly in a very interesting in monetary policy environment right now. The drastic hike at yesterday's meeting is likely not the last. As you said, the bank said it expects to raise rates further at its next meetings.
All right, but does it look like this is going to reduce consumer prices?
Right, that's what we all want to know, especially us here in Europe. The ECB said that they expect consumer prices to continue to rise, unfortunately, for an extended period. That's what that was the wording they used in a statement. They're expecting 2022 inflation to average around 8.1% at this point, but they say that this is a major step away from the bank's longstanding policy, which has been low or even negative rates, and that bringing rates up as they're doing right now will bring inflation back to the bank's target of 2%. demand. But I want to stress again that most of this price pressure is coming from chaos on the energy markets. And these rates, they're not going to fix that. And the hike certainly won't be felt overnight by, certainly not by the poorest people here in Europe who are struggling to afford the spiking cost of living.
Really struggling there. But how's the market taking the news?
Right. I mean, to end the week, investors in Germany's DAX index were, in fact, relatively relaxed after the news. The DAX rose 0.2% to 12,928 points at the open today. So not a major move despite this historic change. One analyst said that the DAX could actually make further gains because investors believe that these aggressive moves mean an end to the hike cycle is in sight. And now, investors today are also interested in a meeting of EU energy ministers today in Brussels. That group will be discussing an electricity price ceiling for private households and small businesses, as well as a price cap on Russian gas. So a few different areas interesting to investors as the week closes out.
Yeah, Christy, especially that energy meeting. We'll really be following to see how that goes. Thank you. All right, so let's go to other markets now. In Asia Pacific, prices rose as investors digested Federal Reserve Chair Jerome Powell's latest comment as he vowed to raise rates to tackle inflation until the job is done. In Japan, the Nikkei 225 gained 0.53%, while in mainland China, the Shanghai Composite rose 0.82%. This comes as China's inflation report shows that the consumer inflation for the world's second largest economy came in at 2.5% in August. That's lower than 2.7% that just recorded in July. Meanwhile, in Hong Kong, the Hang Seng Index closed 2.69% higher. In the United States, stock futures rose on Friday following a choppy trading session as traders considered Federal Reserve Chair Jerome Powell's latest comments on Friday. Let's look at the numbers now. There you go. It's up almost 1% for the Dow Jones, 0.77% at 32,107. And then S&P also in the green, much better than even the Dow Jones at 0.84%, more than 4,000 points. The NASDAQ features also more than 1%, 12,534.75. Looking green there for the features in the United States. And from there we head to the global oil space. Prices rose on Friday, supported by real and threatened cuts supply, although crude was set for a second weekly decline as aggressive interest rate hikes and China's COVID-19 curbs weighed on the demand outlook. Brent crude rose by 1.6% to $90.60 a barrel, while its contemporary, the U.S. West Texas Intermediate crude futures climbed by 1.6% to $84.88 a barrel. Brent is down sharply from a surge in March, close at its all-time high of $147 after Russia invaded Ukraine, pressured by worries about recession and demand. Despite today's rebound, traders say both global crude benchmarks are headed for a weekly drop of more than 2%, with Brent this week hitting its lowest since January. Metals market now. Gold prices rose over 1% to a more than 1 week high as weaker dollar boosted demand for the yellow metal, even as U.S. Federal Reserve policymakers vowed to raise interest rates to tame inflation pressures. Spot gold rose by 1.2% to $1,727.40 per ounce, and the bullion was heading for its first weekly gain in 4, up 1% so far this week. U.S. gold futures gained 1.1% to $1,739, and this comes as the U.S. dollar dropped over 1%. That's its lowest in more than a week, and making greenback-priced bullion less expensive for overseas buyers. Meanwhile, analysts say coupled with a correction in the dollar and easing in the 10-year U.S. Treasury provides a welcome wind for gold. And Africa is about to get that first listing of a medical cannabis-focused special purpose acquisition company, or SPAC, as Psilocybin Holdings Limited raises money in Johannesburg later this year. The company is seeking as much as $2 billion and said, and this is the leader of the business sharing offer will open on the 12th of September and close in November. The initial public offering on South Africa's stock exchange will be just the fourth SPAC listing in Africa and a first for the cannabis industry on the continent. The acquisition target is a facility in Pretoria that has a capacity to produce about 150 million rand worth of cannabis and vaping products a month. And the plant is one of many entities in South Africa to have been given a license to cultivate or manufacture cannabis products. The company mentions that it may later attempt to list on the Nasdaq exchange in New York to raise further funds. Still in Africa, we see that the construction of the $80 million Afrexim Africa Trade Centers in Harare begins on Thursday with a groundbreaking ceremony as Zimbabwe eyes trade hub status in the region. Speaking at the groundbreaking ceremony, Afrexim Director and Global Head Administration says that the AATC will house Afrexim's permanent regional office, a world-class hotel, a trade information center, a major and facilitate the flow of trade information and provide trade services across Southern Africa region. The project, which will be completed in January 2025, is also set to accommodate other regional, continental, and global financial and development institutions. In 2019, Afrexim Bank selected Zimbabwe and Nigeria to host the first Africa Trade Centers. And talking about Nigeria, the country has lost its crown as Africa's largest crude producer, as Angola surpassed the country for the first time in more than 5 years. Angola's average daily output in August of 1.17 million barrels was more than Nigeria's 1.13 million barrels, and that's according to a survey with monthly OPEC output. Well, the last time that this happened was in April 2017, when both nations were pumping about 500,000 barrels a day. Statistics published by the Nigerian Upstream Petroleum Regulatory Commission paints a bleaker picture, with output at only 972,000 barrels a day last month. Now, the recently released Parliamentary Committee report on the national economy and state of indebtedness, grants and guarantees indicates that Uganda's public debt stock has increased by 22%. The money Uganda owes to different creditors shot up to 69.513 trillion shillings. That's about $19.54 billion at the end of the financial year of 2020-2021. From the report's preliminary statistics received by the committee indicates that by the end of June 2022, that's this year, the total debt stood at 78.799 trillion shillings. That's about $20.98 billion. Of this debt stock, 48.13 trillion is external, while 30.662 trillion is domestic debt. By June 2022, Uganda's debt to gross domestic product ratio stood at 48.6%, a few percentage points from the agreed East Africa ceiling of 50%. We'll take a break now. When we come back from that break, you still have a whole lot of stories waiting for you on the other side of Business Incorporated. Let's do it again after the break. Welcome back. You're still watching Business Incorporated here on Channels Television. The National Association of Nigerian Travel Agencies has said that despite the $265 million of the $464 million blocked funds released by the federal government to foreign airlines, the operators are still charging Nigerians exorbitant airfares. Speaking during a press conference in Lagos, the national president of NANTA, Susan Akporiaye, said that the airlines have blocked lower inventories for Nigeria, and this may not be unconnected with the actual amounts received by individual foreign carriers.
Right now, there's an issue of, what will I call it? Transparency and trust. Information reaching us is, out of that 50%, the airlines have just gotten 25%. As in all across the board, 25%. Then some have not even gotten at all. They were left out. The ones that have gotten the 25% now, The problem is even that 25% at the end of the day was even paid short. For instance, hypothetically, if a particular airline's 25% is $20 million, which is what they said they will pay for us, 25%, at the end of the day, what hits their account will probably $12 million. Less what they said they have taken. So this now is creating a trust issues with the airlines. It's creating, there's no transparency. So the airlines are not confident that we really mean to pay them this money. I believe hence the reason why they are still holding forth and they are watching to see how it goes.
And now in South Africa's indebted power utility Eskom Holdings has restarted the sale of its mortgage units, one of many measures the utility is taking to stabilize its finances. The company announced in an email response that it has commenced with the process to sell Eskom Finance Company, the unit it established more than 30 years ago, which has a 9 billion rand, which is $516 million loan book, by inviting prospective bidders. Already, South Africa's National Treasury is finalizing a plan to take a portion of Eskom's debt, which is expected to be announced by midterm budgets in October. Eskom has outlined various measures in recent years to improve its finances and address the 396 billion rand debt pile that it relies on the government to service. World Bank's private investment arm, the International Finance Corporation, the IFC, has said that it plans to inject up to $160 million in equity into telecoms firm Safaricom Ethiopia to help fund its capital expenditure. Safaricom Ethiopia, partly owned by Kenyan telecoms operator Safaricom, started phased operations in August in the country's Dawa city and Haramaya this month. Safaricom led a consortium that also includes South Africa's Vodacom and Britain's Vodafone, which secured Ethiopia's second operator license in May 2021 for $850 million. A separate debt package is also being discussed, it added, without giving more details. The Safaricom consortium is financially backed by British Development Finance Agency, the CDC Group, and Japan's Sumitomo. And latest report from Ghana says that the government raised 7.14 billion cedis via the sale of Treasury bills in August 2022, which is about 39.7% more than its target. It was hoping to borrow 5.117 billion cedis to largely refinance maturing debt. However, the rising interest rate deepened investors' interest in the then short-term securities. The yield on the 91-day Treasury bills increased to 28.61% at the end of August 2022. The clearing rates for 182-day and 364-day maturities were, however, at 29.94%, and that's more than 188 basis points, and 29.52%, which is more than 167 basis points, respectively. Meanwhile, the government will this week raise 1.682 billion cedis across the 91-day to 182-day Treasury bills. The funds will be used to refinance total maturities worth 1.567 billion cedis. The African Development Bank and the Global Green Growth Institute have launched a report analyzing the readiness of 7 countries, which are Morocco, Tunisia, Kenya, Rwanda, Senegal, Gabon, and Mozambique, to drive green growth. The joint report was launched on the sidelines of Africa Climate Week in Libreville, Gabon. It assessed the status and trends of green growth as well as countries' preparedness for the green growth transition across a number of metrics. It also offered recommendations for the countries surveyed in the report. The report found evidence that African countries are demonstrating growing political commitment to green growth. Governments actively champion the UN Sustainable Development Goals and nationally determined contributions under the Paris Agreement. That's all we have for you on this episode of Business Incorporated, the final one for the week. It's been an interesting week. It'll be more interesting next week. Thank you so much. But I'll see you tomorrow. Our Capital Market will be here to give you a summary of all that has been happening in the markets all through this week. That will be 7 p.m. tomorrow. Let's make it a date. Enjoy the rest of your day. I'm Ini John Mekwa.